Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Ryan McCormack, Core and Factor Equity Strategist at Invesco, to discuss weekly trends in the Nasdaq-100. We'll also take a look at revenue growth in some of the largest names in the index. Ryan, it's great to see you as always. Welcome back to TradeTalks, and certainly some volatility in the Nasdaq-100 over the past week.
Thanks, Jill. It's great to be here. And yeah, it was a very tough week for stocks with QQQ and QQQM down 2.61%, and slightly worse than the S&P 500 down 2.51%, and the S&P 500 value down 1.91%. Wednesday and Thursdays were challenging days for performance. Wednesday brought some negative sentiment after Alphabet earnings and climbing treasury yields. Thursday, we saw the Q3 advanced GDP figures released and came in stronger than expected at an annualized 4.9% rate. That was better than expectations for 4.5% and Q2's final report of 2.1%. In fact, it's the highest figure that we've seen since Q4 2021. But coupled with initial jobless claims that remain pretty low, it seemed to add concern about further restrictive Fed policy and interest rates at higher levels for longer, which leads us into the Fed meeting beginning tomorrow. We're going to get the announcement on Wednesday, which is the 1st of November. At the moment, Fed funds futures are not anticipating any FOMC action from this meeting, but we see a 23% chance of a hike at the December meeting.
And Ryan, if you take a look at the sectors that were leading the way or relative outperformance from last week, what did you see there?
Yeah, so because we didn't see too much differential, just because performance was so similar. But the biggest detractor from QQQ or the Nasdaq-100 would be communication services, driven by Alphabet's challenging week. On the other side, consumer discretionary outperformed versus its counterpart in SPY, was the only sector in positive territory for QQQ for the week.
And finally, if we take a look at revenue growth in some of the larger names in the Nasdaq-100, who's leading the way there?
Yeah, so I wanted to highlight this chart because, last week we had four of the Nasdaq-100 heavyweights report earnings: Alphabet, Amazon, Meta, and Microsoft. And we had two company stocks that were rewarded and two company stocks that were not. So in this chart, though, you'll see that all four companies have had kind of directionally similar revenue growth. We saw a big slide in 2022, kind of bottoming relatively in Q4, and a reacceleration of revenue growth in 2023. This past quarter, all four companies showed double-digit year-over-year revenue growth. Now, two of them, like I said, were rewarded. That was Microsoft and Amazon.com last week. So both companies were in positive territory for the week. Microsoft returning just under 1%, Amazon up by just over 2%. Microsoft reported earnings on Tuesday, Amazon on Thursday. We saw EPS and revenue beats from both companies. For Amazon, we saw Amazon Web Services revenue growth coming in at 12%. But the big thing was profit in the space was up 29%. So beyond that, CEO Andy Jassy noted strong demand for cloud. Also, digital ad revenue was a standout. We saw 26% growth year over year. For Microsoft, Azure, as usual, was in the spotlight, and revenue was up 29%, better than analyst expectations for the unit. You look at the relative performance, Amazon and Microsoft were the two biggest contributors to relative outperformance for the week against the S&P 500. So then we go to the other side. We had two companies that were decidedly not rewarded. That would be Alphabet and Meta. Meta reported on Wednesday, beat on EPS, beat on revenue, but the stock was down nearly 4% on Thursday, and it ended the week in negative territory. Despite the company talking about a continued rebound in digital ads, they referenced some weakening demand in Q4 amidst the turmoil that we're seeing in the Middle East. The company also announced a $3.7 billion loss in its Reality Labs division. And then Alphabet, right? So Alphabet Class A traded lower by nearly 10%, Class C down by around 9.8% for the week, down by 9.5% on Wednesday alone after the company reported earnings. Despite an EPS and a revenue beat, cloud revenue disappointed, coming in below analyst expectations, and showed slower growth at 22% compared to the Q2 growth at 28%. Alphabet was the largest relative detractor of performance in SPY. So, we sort of look at that graph and all four showing some year-over-year revenue growth. But as you start to look under the hood, kind of different whispers or areas of focus per company, basically showed two very decidedly different results. And then from an earnings season perspective, we're wrapping up with some of the heavyweights, with Apple scheduled to report on Thursday night after the bell.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.